If you look at how undervalued silver is, I think that's an important point to be made. If you look at the highs that were clocked by most metals, precious metals, platinum group metals, base metals in 1980, we're talking several decades ago, and when silver and gold both peaked. Silver remains the only one of all of those metals that is below its 1980 high. So silver is cheap on that basis. It's cheap on an inflationary adjusted price basis. And if you look at what happened in the 1970s, gold was up 14 times, so 1,400%, and silver was up 37 times, so 3,700%. And I think that we're in an environment that's similar to the 1970s. Not exact. I don't think, history repeats exactly. It certainly rhymes. And some of the differences are that in the 1970s, the debt to GDP ratio in the US, for example, was about 35%. So much, much lower debt levels. Today, it's at 130%. So to think that, central banks can raise rates enough to actually dent inflation, I think is pie in the sky. That simply will not happen. Inflation will run. People will have to get used to it. And it's unfortunate because if you look at what inflation does to your buying power, I think it's at 5.4% inflation over about 6 or 7 years, you lose 40% of your buying power. So $100 is worth $60 in about 6 or 7 years, and that's at 5.4%. So people really, really need to wake up to inflation, what it does to your investments. And if they don't want their retirement to be stolen by inflation, they need to look at proven hedges like silver that, as I say, have proven themselves over decades and even millennia. Silver is certainly used in a lot of applications. It's crucial to industry, and it has proven itself as money, as an inflation hedge and value protection over years. But silver is a much smaller market than gold. And it being such a small market, it doesn't get the attention that gold gets. It's about a tenth the size of the gold market. If you look on a supply basis every year, gold being about, I think it's 270 billion, silver being worth about 27 billion annually. So silver being such a small market versus gold, it means that silver tends to be a lot more volatile. It actually does outpace gold's returns in bull markets. And so you definitely want exposure to silver. You may want to do so in a maybe more limited way because of its volatility, but the volatility should not be, in my view, something that any investor would want to use as a reason to not participate in silver investing. But what happened in 2020 when we had the pandemic and people flocked to gold and silver as chaos hedges and uncertainty hedges, there was a lot of silver buying in both, physical, but also ETF buying. And globally, silver ETFs actually took in about 330 million ounces of silver, which was about 4 times the previous year's level at about 83 million ounces. So that was really dramatic. It's very interesting how even after the silver price might have run up and then takes a dip, in some cases it might be a considerable pullback, there is very little selling that takes place in silver ETFs in terms of their silver holdings. So since 2006, when the first silver ETF came to be, the SLV, silver holdings in silver ETFs globally have climbed dramatically and have very rarely backed off, barely budge even when you get big sell-offs in the silver price. So people who buy silver through silver ETFs tend to actually hold on. So the number of ounces have stayed high and have continued to climb ever since the inception of the SLV. Silver being, again, a much smaller market than gold. If you look at what's taken place previously is that, gold gets most of the attention. It starts to build up. It's the better known hedge, so to speak. It's the go-to initially, at least. And so people often are late to the party. They'll see gold go up and continues to climb. Let's say gold, goes up. I'm not even going to make a prediction right now, but, several times, let's say higher even than it is currently. It's certain that it's going to attract a lot of attention. And if people see gold at multiple thousands of dollars per ounce, they're going to feel like they've missed that opportunity. They're going to look for alternatives. Silver naturally becomes that alternative. They'll see it at a much lower price per ounce and feel like, okay, silver has been rising as well, but I can get a lot more ounces per dollar for silver than I can for gold. I'm going to buy